dive. Today, we're going to tackle something pretty fascinating. We're looking at Tesla, TSLA, but not the headlines, not the cars. We're diving deep into the technical signals, like cracking the code on its stock chart.
Exactly. It's all about what the chart itself is telling us. Think of it less like predicting the future, more like reading the market's current mood, its body language based on past moves.
Right. So imagine we're mechanics, but for a stock chart, looking at the patterns, the numbers, trying to figure out what's really going on with Tesla's recent moves and, what might be next. It's about getting you informed quickly.
Precisely. We're not digging into, say, balance sheets or production numbers today. This is purely about price action, volume, the story the chart tells. And our mission really is to give you a quick, solid grasp of Tesla's performance across different time frames. Because looking monthly, weekly, daily, it paints a much fuller picture, right? Different lenses show you different but connected things.
Okay, let's do it. Let's start really high level. Zoom out to the monthly chart. What's the big picture there? The long view for Tesla?
Well, the first thing that jumps out, and it's pretty dominant, is this ascending channel. Tesla's been trading inside this pattern, basically climbing upwards steadily since January 2023.
An ascending channel.
Yeah.
So like higher peaks and higher valleys, stair-stepping up.
Exactly. Higher highs, then pullbacks to higher lows. It shows a clear overall uptrend over the long term. And right now the price is sitting around $334, kind of nestled within that channel.
Okay, interesting. But then there's this thing in December 2024. It says the stock swept liquidity near the old all-time high. That was around $415 back in November 2021. Swept liquidity. What does that actually mean for us, and why is that moment important long-term?
Sweeping liquidity. It's a key concept. Basically, think of significant price levels like that old $415 high as places where lots of orders pile up. Stop losses, buy orders.
Right, sitting there waiting.
Exactly. So sweeping liquidity is when the price pushes just past that level, triggers all those orders, and sort of cleans them out.
Like a quick grab.
Yeah, a quick grab or maybe a flush out. It absorbs that pocket of orders. And importantly, after a sweep like that, the price doesn't always just keep going. Often it can signal a reversal, or at least, a pause. Consolidation.
So it hits that level, triggers the orders, and then takes a breather because the immediate fuel is gone.
That's a good way to think about it, yeah. The market sort of digests that move. It clears the decks before deciding what's next. It's often a sign that the momentum pushing it to that level might be temporarily exhausted.
Got it. Now, there's another long-term thing mentioned, the monthly RSI.
Yeah.
It's showing bearish divergence since way back in August 2020. That sounds not great. What's bearish divergence?
Right. Bearish divergence is definitely something to watch. It's a potential warning sign. So in simple terms, the price of Tesla has been making those higher highs we talked about hitting new peaks.
Yeah, consistent with the channel.
But at the same time, the RSI indicator, which measures the speed and strength of price moves, has been making lower highs.
Huh. So the price goes higher, but the oomph behind it is getting weaker.
Exactly. Like climbing a hill, but your engine isn't revving as high with each new bit of altitude. It suggests that the buying momentum, the conviction, might be fading a bit, even though the price is still technically rising.
So not necessarily a sign of an immediate crash, but maybe a yellow flag that the uptrend might be losing steam.
Precisely. It warns that pushing much higher might be tougher without some consolidation or a pullback first. The underlying strength isn't fully supporting the new price highs.
Okay, that makes sense. Let's zoom in a bit then. From the monthly down to the weekly chart, what are the key things we see happening there more recently?
So on the weekly, a really significant event happened. Tesla actually broke and closed above that old $415 all-time high.
Wow, okay. So it pushed past that resistance level we just talked about.
Yes, and closing above it on a weekly basis is generally seen as a strong bullish sign. It suggests real strength and willingness from the market to explore higher prices.
But then, it didn't just keep skyrocketing, right? In April 2025, it looks like the price came back down.
It did. It came back down to retest the lower trend line of that ascending channel we saw on the monthly chart. And also tested what we call a demand zone around $217.
A demand zone.
Yeah.
So an area where buyers previously stepped in strongly.
Exactly. It's a price level where history shows significant buying interest. So the price dropped back, tested that old support line in this known buying area.
And then bounced back up.
And then headed back up.
Yeah.
That retest is really important. It's like the market double checking Is this new support level going to hold? Are buyers still interested down here?
So it confirms the breakout, in a way, like testing the floor before walking on it.
That's a perfect analogy. It validates the previous move higher. It shows buyers were willing to defend that $217 area and the channel boundary.
Okay, so after that retest and bounce, what's Tesla doing now on the weekly chart? We're at $334.
Right now, at this $334 level, it's consolidating. It's forming a triangle pattern.
A triangle. What does that usually mean?
It typically signals indecision. You get lower highs and higher lows, squeezing the price into a tighter and tighter range. Buyers and sellers are sort of battling it out, but neither is winning decisively yet.
Like that coiled spring you mentioned earlier, building up energy.
Exactly. It's a period of consolidation, often preceding a more significant move. The market is essentially pausing, gathering energy before it breaks out of the triangle, either up or down.
Okay, let's get even closer. The daily time frame. This should give us clues about the immediate future, especially with that triangle forming.
Yeah.
What does the daily chart tell us?
The daily really sharpens the focus on that triangle. It gives us two very clear potential scenarios. It's all about which way it breaks from this pattern.
If-then scenarios, right?
Precisely. Okay, scenario one, the upside. If Tesla breaks and, importantly, closes above the triangle's resistance level, which is around $355. Okay.
Then we can see a rally. The potential targets would be up towards the $420 to $440 zone.
And maybe even higher. Back towards the old highs.
Potentially, yeah. That could even lead to a retest of that $409 all-time high eventually. Yeah, that would be a strong continuation signal.
All right, that's the bullish case. What's the alternative, the downside?
The downside scenario is if the price breaks and closes below the triangle's support level, which is near $300.
Okay, breaking the bottom of the triangle.
Right. If that happens, it would signal a breakdown from this consolidation, and Tesla could then potentially drop back down towards the $250 level, testing that area again.
So those levels, $355 on the upside and $300 on the downside, are really the key lines in the sand right now.
Absolutely. They're the immediate pivot points that traders are watching very closely.
There's one more thing mentioned on the daily chart. It's trading above the 21 EMA. What does that tell us? Is that significant? It's significant for the very short term, yeah. The 21-day exponential moving average, the 21 EMA, is just a short-term trend indicator. Think of it as the average price over the last month or so. Trading above it generally suggests bullish sentiment in the immediate short term. Buyers have had the edge recently.
But it's just one piece, right? Needs to be seen with the bigger patterns.
Exactly. It's a snapshot. Helpful for gauging immediate momentum, but you always want to consider it alongside the larger context, the channel, the triangle, the divergence. The EMA gives you the temperature, the bigger patterns tell you the climate. Okay,
so let's tie this all together. We've got this big picture monthly view, strong upward channel, but with that concerning bearish divergence. Then the weekly, a major breakout, a successful retest confirming support, and now the daily. Locked in this triangle, waiting for a break above $355 or below $300. What does this mix of signals really mean for you, the listener, trying to make sense of it all?
Well, it means you have a much richer understanding, right? You see the long-term strength, but you also see the short-term pause, the indecision, and you see that potential warning sign from the RSI divergence. It's not just one signal, it's a blend.
It paints a picture of complexity, not just simple up or down.
Exactly. It shows strength, but also acknowledges the current uncertainty. Knowing these patterns and levels, the channel, the triangle, the $355 and $300 pivots gives you a framework. You're not just guessing. You have specific things to watch for that could signal the next likely direction.
Right. It raises that important question, doesn't it? When you see these conflicting signals, this mix, what specific action, what confirmation do you look for before feeling confident about a direction?
That's the key question you should be asking yourself.
Because this isn't about having a crystal ball. It's about understanding the probabilities, the key battlegrounds on the chart. It helps you anticipate what might happen based on how the market behaves around these critical levels, rather than just reacting after the fact.
Couldn't have said it better. It's about informed anticipation.
So, wrapping up today's deep dive, we looked at Tesla's chart layers, the long-term ascending channel, that interesting monthly bearish divergence suggesting caution. We saw this significant weekly breakout above the old high, followed by that important retest around $217.
And now the focus is squarely on that daily triangle pattern, with $355 as the upside trigger and $300 as the downside trigger. Those are your immediate levels to watch.
Absolutely. Key takeaways for understanding Tesla's current technical posture.
And maybe a final thought to leave you with. Consider how these technical patterns, these lines on a chart, they aren't just abstract things. They're reflections of collective human emotion, right? Fear, greed, hope, indecision, all playing out in real time.
That's fascinating. The psychology behind the price action.
Exactly. What does that dynamic between hard data and soft psychology tell you about how markets really move? Something to mull over.
Definitely something to think about. A big thank you for joining us on this technical exploration of Tesla. We hope this breakdown helps you navigate the charts with a bit more insight. Until next time, keep digging, keep learning, and stay curious. And hey, if you found this deep dive useful, do us a favor, subscribe to the Investor's Edge channel right here on YouTube, and give this video a thumbs up. It really helps us out.